Futures this morning, right now, after the 4th of July holiday, the Dow has actually turned negative just within the last hour. But again, three-day holiday, markets back open. S&P is up by 29. NASDAQ's on fire this morning, 329. Now, stocks closed mixed last week. The Dow posted a new record high after jumping nearly 600 points during the session. The NASDAQ dropped, though. Semiconductor stocks did face another sell-off. That was on Thursday. Now let's look to today because chip makers are getting a bounce this morning. Investors are pouring money back into technology, it looks like. Let's bring in Slatestone Wealth partner and chief market strategist Kenny Polcari. Kenny, good morning. What are you watching?
What are you watching? Well, it's going to be the start of earnings season next week, so you're getting yourself prepared for that, right? Because we've gone through kind of the end of the quarter. We've gone through that rotation. We're going to continue to see rotation. I'm not surprised at what you say where the NASDAQ is up today. It kind of gotten beaten up last week, again, with more rotation money out of tech into broader sectors, utilities, industrials, basic materials, healthcare, all saw gains last week on the back of that rotation out of tech. But look, tech's getting to a place where, once again, it's getting to an oversold position. We're coming into earnings. There is opportunity there. So I'm just keeping my eyes open, but I'm going to be cautious going into the earnings season next week.
All right, because Bank of America kicks off things. Excuse me, JP Morgan Chase is kicking off things end of next week. To your point, we've also got inflation data coming next week. All of that is on the table. But I want to talk about oil with you and with Ryan Payne, because let's look at these contracts right now. So you've got Brent and WTI. You've got $71 and change on Brent, $68.23 on WTI. Kipler just telling Fox this morning that 6 vessels have crossed the strait so far today. 5 have exited. Oil tankers also passing through the strait near Oman's coast yesterday after several vessels made unexplained U-turns over the weekend. OPEC and allies agreeing to raise production by nearly 188,000 barrels a day. That's in August. Kipler is recording about 30 to 60 vessels crossing the strait on average every day. And then, of course, you've got the Iranian-U.S. talks, which are on pause right now because Tehran is holding a funeral for its former supreme leader. Kenny, I want to get your reaction because we had James Iorio on with us in the 6 a.m. hour. We asked him about oil and his prediction about oil. Listen to what he told us.
The only thing that seems like truth is the price of crude itself. And look at it, $68 a barrel. It's only about, $8 or $9 ahead of where it was before this conflict started. So to me, the market is saying this thing is 98% done. And to the general's point, that last 2% could be consequential if something flares up again. So there still should be a bit of a risk premium in crude. However, I think in the middle of next year, crude's going to be at about $45 a barrel. And I think we're already starting to see the reasons why. UAE has increased production. OPEC then increases production to keep their market share.
What do you make of that, Kenny?
Listen, I'm in the same camp as Jimmy, right? I think oil is going lower. I think, we're going to see the low 60s fairly soon. 45 might be aggressive next year, but I got to kind of think about how that's all playing out. But I definitely think the path of least resistance is down and not up. And so I fully suspect that, the country's going to benefit really because we're going to see oil prices, like I said, get down into the low 60s, which is where they were right prior to the invasion, right? Where they go beyond that is going to depend on how much this production gets ramped up, how much UAE wants to join. Are they going to let Iran really start selling that much more oil? How much more supply is coming to the market? So, yes, I think Jimmy's right. I'm not sure it's 45, but I certainly think it's lower from here.
Not to speak for Ryan Payne, but I do want to bring him into the conversation. He had the same reaction. But, Ryan, the Journal writes this morning, a sudden glut of oil threatens to weaken Iran's hand in talks. So the supply is out there.
Yeah, it absolutely is. And you got to think about there's a lot of making up for lost profits, right? If you're Iran right now, if you're OPEC plus, there's a lot of oil you want to get to the market because you have those revenues to replace. And also you have the UAE, which is not an OPEC plus anymore. They're going to be doing their own decisions when it comes to oil production. So I think that's going to ramp up as well. So I think, to Ken's point here, oil glut in the short term, I can see it dropping to low 60s. $45 a barrel might be a little Pollyannish, and I also think that because global growth is going up, so oil demand should go up with that. Also, oil security is going to be a problem if you're Japan. Do you want all your oil coming through the Strait of Hormuz or 80-90%? So you may be rerouting some of that. And oil companies as well got burnt during fracking when oil prices were too low, made no money. So there's going to be a lot of, I would say, profits over production that will probably keep a floor under oil prices. And I'm with you, Ken. I think it's closer to $60 a barrel. I don't think it's 45. I mean, I wish it was, but I don't think that's where it's going.
Yeah, but 60 would be, the 60's not 100, to be clear. Hey, Kenny, I want to look at yields with you really fast because we're looking ahead to a lot of data, but we're going to get the Fed minutes on Wednesday. And this is Kevin Warsh's first meeting as Fed chair. We've also got CPI out next Tuesday. June PPI retail sales are Thursday. And then, of course, second quarter bank earnings are kicking off. What are you watching?
So look, I think bond yields are telling you that it's still unsure. I think what it's saying is that yields aren't going up, but nor are they, rates aren't going up, but nor are rates at the moment going to go down, right? I know the meeting's at the end of the month. There's a lot of data between now and the end of the month, so that story could change. But I think it's kind of set in that he's going to hold rates steady at the moment, and then we're going to go through another month of August and into September before the next meeting where they're really going to decide. But even then, I have to be careful because the September meeting is only 5 weeks in front of the midterm elections. I'd be very surprised if Kevin Warsh were going to change policy that close to the election, because then he'll be accused of being partisan, right? And so I think you have to be very careful here. I think rates remain unchanged, and I think that's where they're going to be until after the midterms.
Interesting. Kenny Polcari, it's always great to have you on the program.
Thanks, Cheryl.
All right, thanks, Kenny.
Always a pleasure to see you.
All right, you too, sir.